Hello, investors. This is Ted Zhang, portfolio manager at Revere Asset Management. Today is Tuesday, February 25th, 5:07 p.m., coming to you from Fort Lauderdale with tonight's Revere Roundup Daily Market Insight video. Current market state, we still have it labeled as short-term pullback. Although this continues further, we're going to have to change it to a downtrend. Market leaders remain on the red arrow, 21 over 21 list still under construction. As we've seen many leaders completely collapse in the last few days, and to us, that justifies the red arrow. Short term, all major indexes below the 21 exponential moving average, and therefore it is a red arrow as well. Medium term, small caps, mid caps below the 50-day. Actually, the S&P and the Nasdaq are below the 50-day today as well. So this should transition to neutral or even down soon. Long-term small caps below the 200-day moving average, mid caps are still holding firm right around the 200, and the S&P and the Nasdaq are still above the 200-day moving averages. But we have that yellow sub arrow for the trend to turn neutral. So what happened today? Economic uncertainty causes day three further weakness. Big eight down 2.19%, RG8 down 1.54%. S&P 500 down 0.47%, RSP up 0.10%, QQQ down 1.26%, QQEW down 0.88%, Dow Jones up 0.37%, mid-caps down 0.04%, Russell down 0.38%, Global 60/40 equities bonds up 0.08%, and GROTECTION down 0.48%. So now jumping right into the S&P 500, day three down, living below the 6,000 level now, living below the 50-day moving average, and yet another distribution day. So within the last 4 days, we literally got one distribution day, two distribution days, three distribution days, and even yesterday, which isn't classified as distribution day, was still above average volume. So 4 days off the highs of above average volume. It's definitely not a good sign. And if you look back a few more weeks, we saw reversal distribution day here, another distribution day here, and one on this day as well. So if we look at the intraday chart, pretty much we opened around yesterday's close, sold off, tried to bounce, and then kind of just chopped into the close, but still relatively weak close today, down 0.47%. RSP actually finished green today, holding the 50-day moving average. So that's showing relative strength. As you can see, the relative strength line has hooked above those moving averages and actually accumulation day today. NASDAQ, similarly to the S&P, closed below the 50-day once again in another distribution day. We did hold the 100-day moving average for both S&P and Qs. So that remains support as well as the lows of the base, which for the Qs is 500 and the S&P is about 5770. Equal weighted, on the other hand, also performed a bit better than the market cap weighted NASDAQ 100. This held the 50-day moving average, no distribution day today, but still a failed breakout after coming out of this base. So the picture of this chart is definitely ugly and a lot more ominous now. Dow Jones Industrial Average bounced today, bullish engulfing, just reclaiming the 100-day, but still below declining 50. That declining 21 is overhead as well. But we did see an accumulation volume day today in the Dow Jones. This is boosted by more safer staples, healthcare names, and just more of the dividend heavy stocks, which tend to do better when the markets are selling off. S&P 500 mid cap pretty much closed at the 200-day moving average. Really just looks like it could fall off a cliff here, hang by a thread at the 200 with the 821 and 50 above and bearishly aligned. Russell's living below the 200-day moving average now. The third day it closed below. Relative strength line continues to lag. Really, it's been lagging since November, December. late 2024, where it tried to break out, tried to lead the S&P, but just couldn't find its footing and has collapsed so far. The VIX tried to poke its head above 20, backed off, and closed just under 20 at 19.43. This is definitely higher volatility in the markets now, and above 20 is more of a correction warning, and we definitely will be interesting to see if we get above 30. Dollar continues to stay weak. Tried to rally today, but reversed and closed right at the 100-day moving average. Um, yeah, this is it's interesting as its rates drop, dollars kind of follows with it, and weaker dollar and lower rates often signals a weaker economy. And we are seeing some of those signs too with stocks, bonds, consumer confidence levels, which I'll talk about, dollar rates, oil, gas, corroborating that thesis. Gold, also kicker candle after making a new high yesterday, distribution day today, still above the 21 EMA though. Gold miners undercut reclaim the 21 EMA. Bitcoin gaps down below the lows of the space, still close to above 50. Now, after hours, it's actually pretty much looking for that undercut reclaim of 50.69. If we look at the actual Bitcoin chart, we're actually looking to stage this undercut reclaim of that previous low of 89,028. And Bitcoin is holding the 150-day moving average right now. And Bitcoin is known for these huge shakeouts, completely normal in its character. Nothing unordinary about Bitcoin's price action for now, although it is weak. Continuing on looking at bonds, like I talked about, bond yields continue to retreat. 2 years down 7 basis points today, 10 years down 10 basis points today to 4.29% or 4.3%, and two years at 4.1%. So yeah, bond yields or rates are definitely declining, and this could signal a couple things: slow down the economy, or just people flying into safety as a bonds, especially as bond investors gain confidence that perhaps Doge and the Trump administration will bring the debt deficit levels back under control. And that definitely gives some confidence to bond investors that they can actually be paid back in the future. So that's it with the inter-asset correlation. I'll now head to the tail of the tape. Yeah, still short-term pullback under operating the bear case, well below the 21 EMA, below the 50-day. Day count down 2 to down 3. 3 days below the 8 EMA, 3 days below the 21 EMA. ATR's back above 1%, and as you can see, the VIX is near 20, so definitely volatility expected in the markets. Some strong sectors today, bond prices, sorry. Bond yields were down. Staples, real estate, and healthcare were up. Staples and healthcare are often defensive sectors when markets do sell off. Home builders were up as well. It's likely caused by lower rates. Dollar was down. Communication stocks were down. Bitcoin and Bitcoin miners are down. ARK, oil, and mags. So still a risk-off environment. In GROTECTION, we own no stocks right now. And today, we sold IBIT, trimmed UPRO, and bought some RSP. Since the equal weighted S&P is showing relative strength, and we do want to have a little bit more exposure and be too underinvested still at this time. Bottom line is economic uncertainty causes day 3 further weakness. So for charts of interest today, I'm going to review some big cap or mega cap stocks, and then I'll go over a few leaders that have been absolutely demolished in the last few days, just to show the weakness really in the overall markets. So start off in NVIDIA, really just closed slightly above the 200-day moving average. We had this deep sea gap down on huge volume, more distribution on huge volume, and then we rallied on contracting volume. That's a big sign that you don't have material buyers in here. And with this, you kind of have a head and shoulders type look. We rejected the 141 area and has sold off so far. Earnings tomorrow after the close, and this is a really consequential one. Problem is, RS line continues to decline, and we're seeing deceleration in earnings and sales quarter after quarter. 478, 455, 152, 103. Even revenues 265, 262, 122, 94. That's just because current revenues and earnings are compared to huge beat and raise quarters from the past. So that is what is called hard or harder comparables versus easy comparables with those quarters versus negative earnings quarters. And as you can see, estimates going forward continue to decelerate as well. And just to cite some growth stock statistics, they run on average about 5 to 6 beat and raise quarters. NVIDIA has had 6 to 7 to 8, depending on where you're counting that from. They run about 18 months. This line right here on the weekly is the 18-month line in MarketSmith. As you can see, we're well past the 18-month line from the beginning of the move. That's probably another 18 months plus another 3. So that's like 21 months in the making. And that also translates to about 96 weeks in the move. And then on the downside, once a leader sees a secular top, it falls an average of 72%. And so we'll see what happens in the video, but a gap down on earnings smart below 110 would be extremely bearish, and it's likely done for the cycle. And we'll have to go through stage 4 before heading into another stage 1 period, and then to have another stage 2 uptrend. As you can see, RS line continues to decline, making lower highs. Subtle clue is you had this peak here with this relative strength peak here. You made a new all-time high, but relative strength did not make a new all-time high. You briefly made a new all-time high here, but relative strength continued lower. And those are some signs of a top. In addition, you had a failed breakout on earnings here. You had another failed breakout here. I believe that was on the CIS tech conference. And then you had this deep sea gap down on huge volume, and you just continue, can't rally. Super erratic action versus NVIDIA's prior action. Amazon sold off hard in the last 3 weeks, but finding support so far with the hammer candle today. Pretty much reclaiming the 100-day moving average. Berkshire Hathaway value stocks make a new all-time high, boosted by really strong earnings, 72% year over year. Sales really not growing much. But Buffett is diversified in many areas of the economy, a lot of insurance, many staples as well. So it looks like, obviously Berkshire is doing really well here. Microsoft, terrible look like NVIDIA in stage 4 decline. You had this move, built huge top. The moving averages have flattened and turned down in bearish alignment. And we've cracked this 400 key level that I've been talking about. This is extremely weak, RS29. Revenues and sales really not there. Just not even breaking 20% level. Tesla completely collapsed as well off the high of 488. Sub 300, pretty much broke sub 300 today, but closed above. Huge distribution day as well. Palantir, another one. Earnings gap and completely collapsed so far. 5 days of selling volume. APP, another one. Big earnings gap and completely sold off, slicing through the lows of the gap day back into the base, back to the 50-day. You can see wall of red or wall of pink selling. Palantir, APP, Tesla. Continue on. Kava, wall of pink is selling as well, below the 200-day moving average in the stage 4. Deckers completely fell apart. Negative earnings reaction and just has trended perfectly below the 8 EMA. A lot of selling versus buying as well. OKLO, another momentum leader. Christmas tree pattern. Super nice move up. Completely gave it all back. MSTR, one of the big leaders of 2024. Over 50% off its highs now. Below the 8, 21, and 50 and 100-day. Huge selling as well here. And Bitcoin, let's talk about Bitcoin collapsing too. TEM tried to break out through its IPO base, back down into its range. There are some leaders that completely collapsed. I'll quickly show some of the stocks in construction in our 21 over 21 list. Let's talk about a few green names. Eli Lilly healthcare name stays a robust name with super strong earnings, revenues, triple-digit quarter, 45% revenue growth. Their GLP-1 drugs continue to be blockbuster, continue to gain a lot of traction for their company. Starbucks, people are betting on the CEO change and already starting to cut costs, cut some of the labor force, and delete some products and introduce new ones. Clear the market's liking that. New highs today. Race Ferrari, economic slowdowns, definitely not hitting the wealth, the wealthier sides of society and the world. Race makes a new 52-week high. Actually, this might be an all-time high. Yep, all-time high off its earnings. Ferrari continues to do well. WGS is another one acting pretty well post its earnings. 188% growth, 67% revenue growth. Margins are expanding as well. A nice earnings continuation setup. Problem is, this is a textbook setup, perfect moving average alignment, but we have a weaker market backdrop. So if you were to take it, you'd have to go really much smaller size than usual just to test the waters. On the downside, HIMS got crushed on earnings, down 22% today. APP down another 8%. I already talked about this. China stocks gave up a lot of ground as well. Futu down 5%. Talked about Palantir, MP building its cup with handle, so that's a stock still acting well. Pros pulled back after its gap, still broke lows of the gap, but we perhaps just need to base up on many of these extended names like the APPs, the Palantirs, which have made extraordinary moves from their lows, APP, bros. So yeah, that this is some of the 21 over 21 under construction continue to keep track of relative strength as well as relative weakness for longs and shorts. And right now, it's just more patience. Consumer confidence came in negative. We have GDP Thursday and we have PCE Friday. And then next week, we have the labor market data. So that being said, I'm going to wrap up this video. As always, you can reach out to me at ted@revereasset.com. Actually, great news. Yesterday, I got my Twitter back, so you can reach out to me again at TedHZhang. Our phone is 855 Real Wealth. That is 855-732-5932. Our website is revereasset.com, and our YouTube is Revere Asset. If you're interested in becoming a client or have any questions, you can reach out to us. And with that said, I'll wrap it up for today, Tuesday, February 25th. This is Ted Zhang with Revere Asset Management, telling it like it is. Thank you for listening, and have a great rest of your week.